Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. A lot to discuss on today's show. The market reversed course again yesterday. Tech was strong. Banks and everything else that had been strong for the past few days were not. In addition to that, POD has reversed hard here this morning thanks to earnings from Cannabis growth. They just pulled the rug out from those stocks after a big rally. We have earnings as well from Costco, Salesforce, Williams-Sonoma, Zscaler, VMware, and we're going to talk about the implications of, escalated trade tensions that the president will discuss at his press conference later today. Our guest is Jason Raznick, the man himself. I hope he has a pick as good as he had last week. And with that said, let's bring on Joel here. Joel, update us on the overnight session.
Nice overnight range. Pre-market high 30.39, had a little dip to 11.25, but they bought it right back up. Buy the dippers out there again. Currently trading down 8 handles at 30.30. We have a double close up here at the high of the move, so we got a really big area to close above today. 35.5 Wednesday's close, 38 the high close of the rebound. That's the area we need to clear. Another leg up higher. Take a shot at 3,100. Crude in the red by 78 cents at 32.93. Gold still in that trading range, up 15.20 at 17.28.5. Silver, that's in the green too by 1.6%, up 30 cents at 18.27. Bitcoin hanging out at 9,500, down $95 at 9,465. Triple D, another trading day and a week of a lot of reversals.
Reversal week here, and the chasers have been absolutely punished here. We keep telling you buy the dip and sell the rip, and I'm telling you, man, this last few days it's been just that. Where you see the market rip up overnight, they sell it off, they buy it back in the afternoon, they sell it off overnight, they buy it back again. Yes, we've treaded higher, but it has been a lot of chop on the way there. And the reversals in individual stock names, Joel. So yesterday, during the pre-market, you had all of the laggards, the Boeing trading higher, the airlines trading higher, the retail trading higher, the banks trading higher. And all the tech stocks were down, all the COVID plays down. Once the opening bell rang, 9:30, that trade completely reversed. Banks open up at their highs of the day, some of them matching the previous day's high, and straight down. Stocks like Amazon open up there near their low of the day and straight up. So it's unbelievable. The rotation has just been incredible. We keep talking about it, but it's so pronounced right now. It's such an interesting trade. And if you're chasing these moves overnight, buying the banks when they're up 5-6%, you're being punished for it. So moral of the story, don't chase.
I guess we can go right to the ultimate chase fest and earnings after the close. Cannabis growth, holy mackerel.
Oh.
How did they get that up to 23.49, Spencer?
I see 23.90 on my chart.
Let me
give us the numbers.
Yeah, so losses widened in the quarter. Q4 EPS for Cannabis growth, a loss of $3.72. Is Canadian, $3.72 per share. They had only lost $1.10 a share in the year ago quarter. So on a year-over-year period, their losses widened dramatically. Net sales did increase, but in their release, they talked about how this is going to be a reset year for them. And they're no longer trying to be first in every market. Now they're trying to be the best in the few markets that they're in. So just widening losses last quarter, which is a bit surprising.
And you look here, I have no idea why they bought this thing up on the initial report. Maybe they just figured numbers don't matter. We're going to buy, this pod stock no matter what. The report, like you were saying, Joel, was not good, but they bought it right off of the hop. Just look at that pre-market chart. They bought this thing up to 24. Is it 24.90?
$23.90. Spencer's right. Spencer's right.
$23.90. So on a disaster report, somebody decided this was worth 10% more than it was the previous day, and they pulled the rug out from under it, and they have not stopped pulling the rug out from under it yet. It has been straight down
Crazy.
since that report. Unbelievable reversal here from $23.90 down to $17 here now. It will bounce at a point in time. I feel like if you're trading this, you might get a bounce in here pretty soon because it's pretty straight down. But that's a huge reversal. So I don't know. I guess go 50% retracement of the whole move. You go like 13 to 22 and take off. So what is that? $4.50,
17.5 area.
Right there. So you're in that ballpark. So you know what? If you're looking for a pullback on it, maybe I don't like I don't like any of the pot stocks. I'm just not a fan. We know that. I've talked the reasons why many of times on this show. But with that being said, you're getting a huge dip here, and the dips have been bought. It wouldn't surprise me if it does get bought here, but man, it's a big reversal.
What would be the impetus to start bidding that thing? I mean, I looked at
to take it back now. I don't know.
To take it up, and I mean, like what?
Yeah, take it back up.
Yeah. Well, no. I'm just talking like the initial surge.
Oh, like why it went up on the initial headline number?
Like if I
have no idea.
If I see 372 versus $110,
it makes no sense.
I'd be like, okay, well, how low is it? I mean, that must have been so quick. I'll have to look to see what how that
makes
transpired.
0 cents.
Huh. All right. Well,
0 cents.
You're just leaking here. Step down seller, not really letting up here. 1704 low. Dennis mentioned we're already through the 50%, I believe. So try and find a daily low in here. Here's something for you. If you want to take a look, a pair of lows, let's call it 1660. Maybe a quick flush up to there, down to there, you get a bounce. But there's 2 daily lows right there. Also, if you want to play it a little bit more conservatively, maybe get the big down open, let them flush it out. And then if you come back up through the open, at least you have a reference point, that first 10, 15 minute candle. But I like 1660 there.
It's just hard to get excited about the sector. Like like if you look at the overall, yes, they have been trending higher, and maybe pot is hot again, but the overall trend here for the last couple of years in the pot stocks has been straight down. So if you're just taking the overall trend, rallies are to be sold, and now you get a earnings reversal here. Makes me feel like, okay, we've seen the top. Now any type of pop is going to be met with more sellers. So you can come in here and say eventually it's coming back. It could happen, but a lot of people were doing that a lot for the last couple of years in the pot stocks, and it really didn't materialize. Valuations are all still ridiculous. So and the sector's struggling with competition. There's too much supply out there. So it's hard to get that excited, but I'm not selling in the hole. Nope. $17. I'm not coming in. I think there's a trading bounce here somewhere. That's it. It would only be a trade, though, not a long-term investment.
Yeah, I see ACB coming in as well. That's down 64 cents. That held up pretty well after it had the good news and then the acquisition. And then Tilray, haven't looked at that chart. That's trading down 51 cents. So CGC, your leader here. Let's see, Tilray. Wow, that's a big move, down 55 cents. Don't see much in the 9 handle for supporting this. Let's see, 890 is your 4-day low. Don't think
there's going to be some sympathy moves here. It's going to spook the whole sector. So, and obviously you can look at MJ as well. They've had big moves. So, CGC is going to be your leader here today. If it starts to reverse and starts to come back up, then maybe you can get excited about a few of these names. But until CGC can catch a bid here, hard to really buy, any of these other pot stocks here.
All right, let's go to Costco here.
One more thing I want to add before we
sure.
move on from the pod thing is, if you're interested in this sector and learning more about it, we have our next Cannabis Capital Conference is Monday. It is an online event. It is Monday, June 1st. You can just go to benzingaevents.com to learn more about that. So I want to plug our event that is happening literally in a couple days.
We got Alan for that?
The whole crew, the whole band is back together. So Tim Seymour, Alan Brockstein, everyone will be there, and a number of public and private companies.
We love Tim. He comes on our show every once in a while. Great guy. And obviously we love Alan. We've been with Alan ever since the beginning. So Alan Brockstein, nobody's more knowledgeable in this sector than Alan. So
this will be a big one if you're a sports fan too. Isaiah Thomas will be there, John Sally will be there, and Al Harrington will be there. So three former NBA players will be there, speaking about their cannabis ventures. So, all right, moving on. Joel had brought up Costco. Is that correct?
Yes, sir.
Let's go to COST. They reported after the close yesterday. Earnings per share from Costco, $1.89. A little bit light compared to the estimate of $2.04. Sales $37.27 versus $37.5 billion. So a little bit light on both of the Q3 numbers. Their comps were up 4.8% on a year-over-year basis. No surprise that e-commerce sales were up huge, 64% on a year-over-year basis. So they cited gasoline price deflation as a headwind on sales, and the expectations were high. Looks like they came in just under the bar there, but overall, nothing in the headlines scare me.
We're in consolidation station here for Costco between 300 and 310. That's where it's been the last month. You get down near 300, I think people come in and buy the dip on this again. It's a stock that's still loved. It's a company that's still firing on all cylinders. Yes, we know the masks are an issue, and they're making people wear masks to come to the store. So sales, it can be impacted in the short term by that, but still, long term, Costco, great business model. I think I'd be a buyer at 300 too. I'm not, but just as a trade, valuations always kind of turned me off it. That's why I've stuck with the Targets and the Walmarts from my portfolio perspective. But still, Costco probably best in breed. 300, I think you find support.
This is there's someone really wants this thing at 302.50 area. Initial spike 302.51 and went back down at 302.50. So I mean they're not chasing. They're sitting there. They're being very, very patient. I look on the dailies. On the dailies, I don't have anything there. On the dailies, you have the number that Dennis is referring to at 299.47, but I don't know. Got to get rid of that buyer at 302.50. Sometimes when you see the charts like this, they stay there and they don't move. But that's support and just kind of inching up at 303.80. They're not chasing, but I don't know. We'll see if we get down there and test the pre-market low.
A couple other stocks, Big Lots. Holy, that's a big move for Big Lots here. The stock has come back all the way. I mean, ridiculously, like we're talking about a stock that is way above where it was even in February. I can't fathom or understand this long-term move at all. If I owned Big Lots, I would be hitting the sell button so hard in my invest portfolio because I think it's not a company that was firing on all cylinders coming into it, but now they're acting like it is. Yes, it's, discount retailer, so it kind of fits that bill, but this stock was not performing well really in 2019. It was leaking, and now all of a sudden they've decided this is one of the best retail stocks out there. I think it's nonsense. The numbers must have been good though. It's trading up 13%.
It seems like they had a good quarter. Surprisingly, EPS $1.26 versus a 32-cent estimate. If that's right, that's a pretty big beat.
$1.26 versus 92. Yeah.
You're using 90. Okay, so our numbers off
92.
there. All right, fine. Revenue, that's more like it. Revenue 1.4 versus $1.3 billion. So they beat on both the top and the bottom lines. Growth on a year-over-year basis. Comps up 10%. I'm not sure how you discount comps in relation to this crisis we're in, but I guess that's a good number.
Well, yeah, and you got to think people are, stocking up too, right? This was from Q1, so people were going into the Big Lots and stocking up too. So it's not surprising, that this could have got a little bit of, hey, we're going to go into lockdown bump. I think this is a really good selling opportunity. It got up to $44 here this morning, which has huge resistance up at 44 to 45. You are fighting a major trend here. So if you're shorting this, you're fighting the trend, but I think eventually the stock comes back down. I don't know if it's going to come right back down. And we've seen, some of these stocks, really take off. But does this have a big online presence or something? Like I'm trying to justify this move in a retail environment. And we know discount retailers have done better. But again, Big Lots was like $27 when this thing started. It's $41 now. You're telling me Big Lots is worth more now? than it was before, unless they're selling everything online that I don't know about. I have no idea why the stock is trading up here.
Yeah, I have to see that pre-market high. You've leaked off it, so that makes you think that if they go try and take it back up in that area, that you're going to find sellers ahead of it because it went up to 44.02 and backed off considerably. If somehow it gets through 44, then the upper 44 handle, the 45, it has a bunch of monthly highs in there. So keep an eye on that. On a retreat, the only intraday support I can give you is 40.51. So you give some more back under 40.51. Top of yesterday's range is real down, way down at 40.10. And just for reference, I looked at the BJ's Wholesale Club chart, and that popped, made the high in the day of the move, and I was just kind of hanging up there. It's not giving it back, but you could definitely sell. There's some major resistance forming in the 37 handle in that. So
I mean, BJ, a different company,
different
though.
company.
So yeah, I wouldn't. This is wholesale versus a discount retailer that takes basically everything that doesn't sell anywhere else, marks it down big time, and that's their shot. That's their whole business model. I liked that business model for a while, and I told you they classed up the stores too much, and I was like, I don't think they're conflicted. They don't know what they are anymore, and that's really when the stock for the last few years has been disappointing because they went away from this whole we're just basically a garage sale here for all other retailers, and they tried to class it up and get nicer stuff in there and clean up, and it just didn't feel like it felt like they were conflicted, and the prices started going higher, and I'm like, well, what the hell are they then? Then I think maybe they're starting to figure it out here again because the stock sure has come back a lot, but this went from $10 to $41. If you're buying it now, you're doing it backwards.
Just real quick on the Big Lots number, the 92 cents, that was their EPS in the same quarter last year. So the estimate was all the way down at what I say, 32 cents. So the EPS was a huge beat on the estimate, and it was a nice beat on a year-over-year basis compared to so 92 cents was last year's EPS figure, not the estimate. So they beat the estimate, they blew it away. Dennis, you still take your kid there to destroy the place or no?
No, that was Burlington Co-Factory.
Oh, that was Burlington. Oh, I'm sorry.
We'd go into the Burlington stores, and you could always play with all the toys. So yeah, my and obviously it's 5. He's getting a little bit, but I take the kids in there, the 5-year-old and 3-year-old, into you take them into like a nice store, even like a Toys R Us before when they were before they were bankrupt. And you felt bad, here they are, and my kids just start taking toys off the shelf and playing with them all, making a mess of the toy section. I'm like, okay, we got to go. I'm getting embarrassed. You go to Burlington stores and everything's already off the shelves. All your other kids done the same thing. So it's like, I don't feel bad in there at all. So I like going to that store. And my kid can destroy the whole toy section. Looks the same as when they started. But discount retailers.
Real quick, I
Sorry,
want to go
Burlington.
back.
I really didn't mean that your stores are destroyed. Just
that you like to destroy them.
Yeah.
Yeah, someone wants to know if you got
Or
banned
get fired from another store. Yeah.
Yeah, are you gonna get banned from these stores too?
Well, that's why you would have thought I got from Value Village. You would have thought I'd get banned for that, but obviously it was a different story. So
Yeah, well, you don't have to worry about that now since you're not going to any stores, so don't have to worry about.
Yeah, I don't go anywhere, so I don't have to worry about getting banned from.
Let's go with some big tech stocks here with earnings out. How about
Salesforce? Yeah. This is interesting because their earnings were fine, but they were a little bit light on their guidance. So the Q1 adjusted EPS of 70 cents, beat by a penny. Sales 4.87 versus 4.85 billion dollars. So beating the beat, like I said, not bad on the Q1 numbers. The Q2 EPS guidance was light though. They gave a range of 66 to 67 cents per share. Estimate was up at 75 cents per share. Sales they gave around $4.9 billion. A little over $5 billion was the estimate. So light on the Q2 sales and EPS guidance, and likewise a little bit light on the fiscal year EPS and sales guidance. So light guidance to go with what was an inline earnings report.
I actually traded this last night. What was the low, Joel?
The low on the initial spike was 172.72. I know where you got it. You probably got it at like 173.
Yeah, I think 172.90. So I literally picked the low on this. I didn't get on the initial spike. I got on the second.
Yeah, I see that.
The second try down there when it didn't take it out. And main reason I was buying, I was like, first of all, it was coming on mad money in like an hour, and you knew the CEO was going on there, and Jim Cramer's probably going to talk it up a bit because he likes the stock. So I'm like, I feel like I got like a little Jim Cramer put here on this. I don't think it's going to continue to go down, and it did spike up a little bit in the mad money. You can see around that 6 o'clock area. That's when it started to go up because CEO comes on mad money, retail gets excited, and they're like, oh yeah, Jim Cramer still likes the stocks, let's buy it. Then I sold it after the segment got done. So I did play it. I made 3 points on it.
Good job.
It's kind of just in the consolidation station here after hours. It's a loved stock though, loved tech company. I would imagine at some point in time, I don't know if you're coming in on day one and buying the dip on this, but maybe you do. It's a loved tech company, so it wouldn't surprise me if this thing bounced back.
The pre-market low 172.64. Nothing there on the dailies. What I see on the dailies, 2-day low at 171.37. So if they manage to press it through it, just be aware that your 2-day low. And interesting, it's been really quiet since it made that low. It got an initial spike to 176.59, but it's just hanging out here. 176, very, very quiet. Bulls and bears are squaring off. So a little bit of resistance here at that pop 176.57. And you see the support from the pre-market chart. Looks like buyers are stepping up a little bit here in CRM.
You're seeing the same trade sort of strength in tech today, really, is the theme. Salesforce is kind of the exception to that, but look at Zscaler.
It's yeah. And obviously, and that was from earnings, but you're exactly right here, Spencer. This is the exact opposite of yesterday, exact opposite pre-market, where we had tech getting hit hard, and we had all of the, so-called lower P stocks, call them, the ones that have been hit really hard from COVID, the airlines, they were all flying. And it's the exact opposite story here today. The airlines are all trading red, and tech is trading higher, and the COVID plays are back on. That trade reversed yesterday morning and has just continued. I mean, Peloton, bring that one up and look. Yesterday morning, retried to get to the lows of the previous day, but straight up really since the open, and closed fairly strong. And then you can just look, it's the same story with all these. Amazon, Shopify, they're all trading in the green here today. It's a completely reversal from yesterday.
Wait, actually, going back to that, I was like looking at, for example, let's just say JP Morgan. Okay, so pull up JP Morgan. I've got the 1 minute chart up on my screen.
Yeah.
It opens at the highs. Okay.
Yeah.
Dennis, how quickly do you realize, oh, this is going to happen?
Very quickly. It depends on your position. If you were buying those, you're going to know right away. I'm like, I'm getting killed. Oh no, it's real quick. These reversals are wicked when they happen. It's 2 days in a row. These stocks opened right at the same area and did the same thing. I mean, it was Groundhog Day for 2 days there. Banks all open strong and straight down. I mean, look at the charts, the 2-day chart for JP Morgan. Look how identical this is.
I know.
The exact same thing happened. So if you're getting burned the second time, it's on you. I mean, we've been talking about not chasing. I shorted all the banks on that first day. I talked about March 27th. I even tweeted it. So if you don't follow me on Twitter, because stuff changes between 9 and 9:30 once I leave. And if I see something that I think is ridiculous and I tweet it out, I said all of these banks have huge buy imbalances. I see a potential for upside capitulation. What does that mean? It means I think all these banks are going to open at the highs. And they did. And I shorted Bank of America, and I shorted JP Morgan, and I shorted Citigroup, and I shorted all these banks. And like I said this yesterday on the show, I was up 1-2% in these trades in seconds. Like the Bank of America, I think I shorted like 26.19 or something, which would have been the opening tick, which was the very high, or 26.19. By the time I brought it on my screen, like 5 seconds later, because you get filled in all these stocks, it's like at 25.70. I'm already up like 2% in trade. Literally, I made 2% before I could even bring it up. So there's huge money to be made at the open. I've always said, where I make my most money is in that first couple of minutes of the day. I don't even trade from like 11 o'clock till 3. I've talked about this on the show before. I'm not at my trading desk. Those are chop hours. There's no trend. It's all chop up. Yes, the odd day you're going to get something, but it's so bloody efficient. The markets, the high frequency traders are all over it. They're going to chop the hell out of you. The most inefficient time of the day is 9:30. I trade inefficiencies. That's where I make the most money. But if you don't know what you're doing, that's when you're going to get burned. So you got to kind of have some skill set to know what you're doing. I'd say newbies, don't try to just trade the opens out the bat, because this is where the wicked moves happen. But when you can anticipate, a reversal, of what's going to happen. And you can feel like, oh man, they're all trying to buy this open. It's probably going to go the other way. The whole game is just fading the short-term day traders because they're always wrong. The crowd is always wrong. Whatever trade is crowded, it will go the other way. And if you can figure that out from where the short-term money is really piled into for the day, the short-term day traders, there's a lot of money to be made doing that.
Nearly identical ranges in Bank America yesterday, 26.17, 26.14. Wow, that opened up almost $2. When are you going to see that in Bank America?
Ridiculous.
I mean, how much?
Especially after a big move. So it's had a big run, and then you get this huge. So it's exact opposite, Joel. We've talked about this. We talk about capitulation, where all the sellers just have to sell and get out. That's when the stock's going down. I call it, I don't know if anybody else has ever called it that, but I've called it upside capitulation. When a stock, I've called that for years. I've never really seen anybody else talk about it in that text, but I call it upside capitulation. When all the buyers just have to come in, they're like, I have to own the stocks. I've got to be in. These banks are the next thing. They're going back to the highs. I've got to be in. At that moment, that's it. And when your mind starts thinking that I missed the boat and I have to own these banks and you're pressing the buy button, stop yourself. Because that's the top. It's like my wife. So during the crisis in March, this was back, when SPY was trading at 230, and I had sold literally 80% of my portfolio away. I had like not that much left in stocks. We still got rocked in the 25 or 30% of stocks that we had. We got rocked in those. And my wife was looking at it and just saying, here I've raised 70% cash and I'm still getting the beats. And she's just like, at the end, she's like, I never want to own a stock again. Just get rid of them all. Get rid of everything. And this was right this day when she was like, just sell everything. I want out everything. And she almost had me like convinced too. It was like, I don't even know if I want to invest in stocks after this. Cause I watched, I watched my portfolio, which was 70% cash, still somehow go down like 10 or 12%. Because the markets went down 35%. So if you're a third invested and the markets go down 35%, you lose 12%. I'm like, I called this bloody thing and I'm still losing 12%. I'm like, how is that possible? Anyways, on March 20th, it felt like, oh my goodness, even to myself, I was like, I never want to invest in a stock again. And my wife's screaming, sell everything. I'm done with it. And you know what? I said to her, I was like, this is the bottom. I'm like, this is the day. And there was one more day of it. It was the next day. So she was doing this on March the 20th. And there was one more real flush on March 23rd. And then we reversed. So it's that day where you feel like puking your guts out. That is usually the bottom. And in the opposite way, when you feel like I'm going to miss everybody's making money except me, and you have to hit the buy button, that's the top. You can, and it's crazy, but it works like that because your psychology is going to be very similar to everybody else's psychology. And I felt like it. I feel like I've missed the boat on a lot of this stuff, but I haven't felt like, I didn't really feel like, oh my goodness, I can't believe these prices until a couple days ago in the banks when they just got silly. And, you saw like these airlines and retail stocks were like 30% in 2 days. It felt overdone. So is that the top? I don't know, but it needed some cooling off. And that's what you're seeing now.
That was, for Bank America to move $4 in 2 days. I mean, you're not going to see that happen.
It's a ridiculous move on no news. It's all FOMO. That was all FOMO. What was driving this rally? People will come in and they want the fundamental reason. The media calls, the reporter calls me, give me a fundamental reason. It's FOMO. This whole thing is built on FOMO. It's not built on reality. The whole market doesn't make any sense at these prices. We've talked about that. It's built on FOMO, but FOMO can carry it a long time. And you look at there is a risk here right now because we know we're going to have the Trump thing coming today. He's going to talk China. He already said he's mad at China. So it isn't going to be good. So I think the market's probably a little bit nervous, but do they just shrug that off again? They might. It's definitely the bulls are still in control here. But with that being said, that the market's completely disconnected from reality. But it was disconnected in 1997, 1998, 1999, and didn't come back to reality until 2000. You had Cisco, CSCO, in 1999, trading with a PE multiple of 85. You had Walmart trading with a PE, Walmart, big box store, trading with a PE of 50 back in 1999. And people were coming out and they were just saying, you can't use traditional metrics anymore to value anything. It's all about growth. And, this is it. And, all these stocks are going to, just continue to go higher. Well, Cisco topped out at $85, I believe it was, or $80 back in 1999. And here we are 21 years later, and the stock is 45 bucks. So don't tell me valuation doesn't matter. It does eventually. If you're buying stocks and sticking them in your long-term portfolio that have P's of 1,000 or don't make money and maybe never will make money, eventually it does matter. It doesn't matter for 3-4 years for Cisco, though. It kept going up like that, and people kept scratching their heads. So the timing of it's almost impossible. But just be careful with what you long-term invest in, because if you were investing in Cisco and Microsoft, Apple's exception to the world because Apple and Amazon were, a lot weaker companies back then. But the darlings in 1999, they called them the Four Horsemen. Do you remember who they were, Joel? Do you remember the Four Horsemen?
Cisco. Was it Intel? Was it Yahoo?
It wasn't Yahoo.
AOL?
I'm trying to remember too. Does anybody remember the Four Horsemen? They called them like in 2000, the Four Horsemen. I think it was Microsoft, Cisco. Maybe I'm not remembering right, but there was 4 big guns. Maybe the Four Horsemen came later and it was Apple. I'm not sure, but I think this was well before FANG.
All right, how's this? Microsoft, Intel, Cisco, and Dell.
There you go. Is that what they just Googled that, the Four Horsemen?
Yeah,
I Googled
Yep.
Microsoft, Cisco, Intel, and Dell. Bring up those charts because I want to tell you, this is for long-term investing. This is a thing for all the long-term investors out there, not the traders. The traders ride the momentum. I ride the momentum. I don't mind being along a stock like Shopify. It's got a P of 100 if I think it's going higher yet. I think I've got the timing down, but I don't want a long-term and not look at it again. So bring up the first one, Cisco. Or what do you have up there right now?
This is Cisco.
So $82. Here we are 21 years later when they told you back in 1999 that P's don't matter. 82, 21 years later, 45. You know what happened? The growth slowed down. As soon as the growth slows down, these things come back down to earth. Let's go to the next one, Cisco. Let's go Intel.
Okay, there we go.
It's an interesting exercise because
75 to 61.
Never got back. Here you are 21 years later, you never got your money back if you were buying Intel at a P of 80 because Intel chips were going to be everything. Yes, they were, but they weren't worth that valuation. And eventually valuation did matter. Bring up the next one, Microsoft, because everybody loves Microsoft and it is making new highs, but it took a long time.
So they actually have growth.
And they do. They changed their whole business model, though. Right. That was Windows. But look, you went till 2017. So you went for 18 years before eventually it started to go. Yep. And Microsoft's changed everything. They're focused on gaming. They're focused on everything. They've really, obviously, cleaned themselves up, and changed, their business model away from it was all Windows. If they were just stuck with Windows, then it'd been in trouble. But and then what was the other one? Dell. Bring up Dell.
Tough one because they went private and
that's a tougher one. And
I don't even know if my chart goes back. No, it doesn't.
But so it won't go because it went private and then came back. But I don't know if it ever came back to that kind of pricing. I know because I was an investor in some of these stocks. This was when I was learning, and I can remember I bought some tech fund back in 1999. When I was first learning to trade, and that tech fund I don't think ever came back. I don't think I ever got all the money back because they were in all bad companies. So obviously I've gotten rid of it since then. But I mean. It's tough. It's tough. So as a long-term investor, what I always want is I want the GARP, growth at a reasonable price. And when you're just throwing it into anything and saying, oh, well, I know if I invest in Shopify or I invest, in Roku, that I know these stocks are going to be, these are going to be the next this is going to be it, and these stocks are going to, make me a millionaire. Well, you got to know what you're investing in. I like the growth where I'm not paying a ridiculous valuation. That's why I like Facebook for a long time. The valuation's okay. Again, as trading is a completely different animal. Jump in the momentum, ride the trends, draw your Jeff Mackey purple crayon on there. But from an investing standpoint, you've got to be careful when you're paying ridiculous prices for companies.
All right, we've had a little bit of a sell-off here. I don't know if it's some economic numbers. I saw something.
Yeah, so personal spending for April came out, and it fell 13%, 13.6%, or sorry, it was down 13.6%. That actually seems high to me. I mean, that was more than the estimate, but I mean, my personal spending was down way more than 13% in April. So, but a 13.6% decline is the most on record for consumer spending on a month-over-month basis. So, that's the number we got at E30.
Well, if they didn't like it, and we almost got to unchanged here in the prior bracket. It got up to 30, 34, 50, folks. I mentioned the double close up there, and they are the high closes for the rebounds. That's going to be really my bogey for the whole day. You got up there again, and then you peeled back to 21 and a quarter. So nice little break there off that number. See if we can rebound again and get back up there.
So if I could just put a bow on this conversation, is the takeaway, Dennis, that it's just too late for anyone not already invested in the FANG stocks to buy the FANG stocks? Is that what you're saying?
No, the FANG stocks, because Facebook, the multiple's reasonable. I love Facebook. I think long-term Facebook's still okay. And I think they're trying to do different things. The shops that they're talking about, they're doing different things. Apple. What I'm saying is, there's some of these smaller stocks that, you just buy them at all costs. Like the cloud stocks have just been on fire. I mean, Wayfair, just cannot stop going up. So you've got to consider valuation to a certain extent when you're long-term investing. When you're short-term trading, it's all about trends. It's all about what is hot, what is not, and riding those trends. So buying the dips on stocks and uptrends, selling the rips on stocks and downtrends. So two different animals. Try to keep it separate as how, I've been successful in both sides of it. I mean, I think I've done a better job with my trading. Sometimes I challenge myself whether I'm a good enough investor or not, but I think my trading sometimes impacts my investments because I end up selling the good stock too soon. But it's tricky. It's tricky as a trader to have two separate accounts and say, I like this company for the next 10 years, but I like this company for the next 10 minutes. Or I don't like it for the next 10 minutes. It's tough.
That
you struggle with it, Joel? Like you do both. You do
yeah, but I'm
trading
not.
and long-term
I'm more index than you. Like you're doing.
And you know what? And that's maybe the key.
Yeah,
and I do have a lot of indexes too. That's maybe the key. So you're not getting just chopped around. But I like the I like this company.
You do the CFA analysis, and you're
Dennis is a closet. He's a closet indexer. He's indexed
a little bit.
Yeah.
When you own and obviously I used to say I owned 100 stocks in my long-term portfolio. Like I said, I sold a lot. I'm saying I'm down to about 50. Yeah, I got about 50 still probably left, but it's definitely it's when you get 50 stocks, you are the market to a certain extent. Obviously you can be a little more value oriented, you can be a little more growth oriented. I try to put a few value names, but we know I've always been a fan of dividends. I'm a fan of getting paid. So I've always owned a lot of preferred stocks, a lot of stocks that pay me to wait even if they start to disappoint. And I look at stock like Enbridge I put in my portfolio, Canadian company, utility company, yielding 7% here. I mean, it's a stock that, I think isn't going away. It's a stock that survived through the financial crisis. I don't believe that we're in a crisis situation where utilities are in trouble. So, that's the kind of company that I like. I get a 6-7% dividend,
nice yield,
potential for a little growth. That's the kind of company that I like.
Get some questions here about the House of Mouse here, and it looks like it's rolling over a little bit here. I don't know if you saw the high of the rebound there, 123.78. 116 was the low from yesterday. I'd keep a real close eye on that 116 because you had a daily low right there on the 20th. And then you matched it yesterday. You bounced. You're leaking again today. Your next daily low in that is 113.42. So important area to hold. And it just doesn't look like you have any aggressive buyers here, taking this up in the pre-market. So keeping an eye on 116 support in Disney.
A reversal day, last couple of days. I gave my rant 2 days ago when Disney was trading at 120. Or 1 or 2 days ago.
Crazy.
And I just think it's ridiculous. I gave the same rant at 100 though, so I've been wrong. And it went to 120. I wouldn't own it. I mean, it doesn't make any sense to me that I don't see the huge growth coming from Disney. I see a lot of problems coming in the next while. Even if they reopen the parks, they're going to open them with 30-40% capacity. You're going to put masks on your kids and stuff. I mean, it doesn't sound very magical to me. No, thank you. Once they get past COVID, I love Disney again. But right now with COVID still out there, and I don't believe it's gone, I'm not a fan of Disney.
All right, 2 minutes before we're going to bring on our guest today, Jason Raznick. So 2 minutes before the hurricane shows up, you want to cover another stock or there's a few tickers in the chat. There's a few more earnings we didn't get to.
Oh, yeah.
Glue Mobile gave guidance
Sure.
yesterday. That
Sure.
is helping the video game stocks this morning. Glue
It
Mobile guided that their Q2 bookings, I believe it was Q2, right? Yeah, Q2, or they actually raised their guidance. Q2 bookings guidance, they raised it just by $12 million. From the low end, it was $150 million. Now it's $162.5 million. So they raised the low end of their Q2 bookings guidance and the low end of their fiscal year guidance as well. So that's helping the video game stocks this morning. GLUU.
Nice pop, up 10% almost. I own it in the
Big
long-term
move.
portfolio. I did not sell out of it. I had a trade on too, actually, but I sold the trade portion of it, which I just bought at yesterday's low. I thought the double bottom might go 865, 865, and then I got the bonus of the stock having good news after hours, so I sold into that pop on the trade portion. The investment portion, I'm still sticking with it. Michael Pachter call. I think you got huge support at 8 if it was ever to get back down there. I don't think that's happening. You're going to have resistance up at 10, though. So if you're trading this thing, buying at 950, I think you get cheaper. But I like it.
Boy, that's a big move for this, right? I mean,
It's a pretty big move.
Yeah, 84 cents. I mean, good guidance. Trading at 952. I'll just look at the spike there, and that took it to 970. Not too far away from there, but you got only 2 daily highs to contend with. 987. That was your May 13th high, and then a pair of highs at, let's just call it 10 and a quarter. High of the move, 1072. I don't know. That's a big move for this. Let's see if I don't think it's going to get there. I think you have problems even getting up to that 10 and quarter area.
Okay, I have opened up my Fidelity brokerage account. I have a trade ticket opened. I'm ready. Jason Raznick, tell me what stock I need to buy right now.
We want the immediate gratification.
My fingers are on the keyboard. Jason, tell me what I need to buy.
I hear you.
We want immediate gratification. We want to see 100% mover in 1 second.
I wouldn't expect anything else. You know, my instant messenger name used to be UPod7, under promise, over deliver. We've had 2 almost 100% in a week in a row, and we got to continue that run. But you know, you can't get it that perfect. I mean, I was listening to you talk to us about growth at reasonable prices. GARP. I used to live by that. But now who knows what GARP really means, because you don't know what Express Buy is going to come out with. You don't know what these companies come out with. Amazon, You would have sold it. If you're going by GARP, you would have sold Amazon at $10 like I did many years ago, and now it's at $2,000. So GARP is great in the short term, but like in the long term, you just don't know what these companies are going to invent, you know?
So I'd say opposite. I'd say GARP is useless in the short term, but very useful in the long term. I mean, again, Amazon's there's always going to be an exception to the rule, but you know, when we were looking through those stocks that you were buying at ridiculous valuations like Cisco and Microsoft back in 1999, because those were going to be the companies that were going to take over the world. It took a long time to get your money back in Microsoft, and you never got it back in Cisco. You never got it back in Intel. So I think GARP is very useful in the long run. I think it's very useless in the short run.
But the other side of that, to Jason's point, is like most people don't have the time and the patience to wait on an Amazon for 15 years or
it depends.
10 years, right?
It depends on your time horizon and what you are. I mean, if you're an active trader, you need active trading ideas. This is my income. So my trading is my income. I don't have a second job. You know, besides, well, I guess I do a radio show, but but I mean, this is my income. So I need, you know, to wear both hats. I need to be able to ride the momentum on the hot stuff. And I also need to be able to think about my long-term portfolio and, you know, and doing a full-on like CFA analysis on certain stocks that I think I want to hold for the next 10 to 15 years. So sometimes you have the luxury of doing both. Sometimes you're one, sometimes you're the other.
Dennis, let's just go to real numbers. Would you say Tesla is a GARP play?
No, it's a momentum play. Full Momo. I would never put Tesla in my long-term investment portfolio at these valuation. I think when we look at 10 years from now, I think it's a lot less. I know you're going to take the opposite side of that, and maybe they start diversifying themselves out like Microsoft did, and they start going into all other things. Like it's a real technology play where they're not just doing cars. But you know, if it's just a car company, the valuation is absolutely insane. But you know what? It's not saying I can't be long it right now.
And that's where we totally disagree. But that's what makes the market, I guess.
Yeah, well, why do you disagree? Well, I'm not saying I'm bearish Tesla. I'm not bearish Tesla.
I don't think the valuation's insane. I think it's going to be at $2,000 come a year and a half from now, 2 years from now. But
at $2,000, what's the market cap? Let's go look.
You just do the math. There's no one that has the margins that Tesla has. I was talking to a high-level GM person yesterday, telling me about how they're moving to electric, they're automated. He's like, I know my days are numbered here, basically, because how can GM compete with Tesla? Just how? Tell me.
I'm not a fan of GM either, Jason. So,
but how can GM is not the play? It's a representative of a monolithic or old line automotive company.
For sure. You got to hear me out here, though. GM never had a $500 billion market cap. So at 2000, Tesla's worth $500 billion.
Like 300.
No. At $2,000 a share right now, Tesla is $150 billion market cap, which is more than I believe GM has ever been. 152 billion. So if we go up to 2000, that's 150% increase. So 400 billion. Be worth $400 billion at $2,000 a share. Is there any automotive company that's ever been worth $400 billion? I don't know if that's, I don't think so. I don't even think close. What's like, Fiat worth, or maybe we should look at, you can look at all these. So I just look at potential of, like Fiat's worth $14 billion. So you're talking about something that's going to be 25 times the size of Chrysler, 25 times. I don't think they can do it just with autos, Jason. This is just my point. I'm not saying it can't do this. Valuation didn't matter. Maybe it can go to 2000.
Hold on. You already know they're not doing it just with autos.
No, I don't. What else are they doing?
The batteries.
Not just batteries. Solar roofs, additional batteries. There's products, but what I'm trying to say to you said the only way they're going to grow into it is if they become like Microsoft and do a billion different things. I am making the argument that they don't need to do a billion different things. They need to do a few, 3 to 5 things really well. Right now, they have almost a monopoly on lithium, but also they have a monopoly on the distribution. The way that car companies and service, it's all gone. These companies are going to go bankrupt, and they're going to be one of the lone survivors in this space. Unless these companies really destroy their own model. So I do think that the electric, a big part of his, Elon puts a lot of it out there. Some of it he hasn't put out there, but a big part of it is they believe that they will be the Uber of transportation. That people will not buy. They'll be subscribing to cars. People, you click a button, it'll come to you. There's a lot of that stuff that sounds so futuristic, but it's not. When I drive my car, I barely touch the wheel. I squeeze it every 30 seconds to let it know I'm there so it doesn't take me off. And that's just the beginning. In 3 months, at least here, I'm going to be able to green light, red light. There's so much stuff, but that's just the beginning. Selling a car is one way to make money, but what they're doing with the car is make it into a new business, delivery, transportation. There's so many things that aren't even out there, but most of it has to do with the vehicle and the battery to power everything. I have friends who have basically Tesla solar panels. They're completely off the grid. The cost to do it is almost to what would cost to do a normal roof. It's about 1.5 to 1.75 times higher. It's just, think of it as a DT energy car, but again, it's the core focus, just like Benzinga. Our core focus is content. Their core focus is batteries.
So I feel like, Jason, you wouldn't mind the headline that they're reducing their prices, right? Because it would just make the cars more available.
So
or maybe not.
No, 100%. They didn't reduce the Model Y. They reduced the Model S and Model X. The margins on these things, you guys got to go watch this guy Monroe. Type him on YouTube. He's like the most sought after car guy in the world. He's like, there is no other car company. And he goes, and this guy was a Tesla hater. No other car company, no other phone company, no other company in the world that's doing what Tesla is doing. There's a thing called continuous improvement versus continual improvement. Continuous is when you're constantly making quick updates, quick fixes versus doing a big release like a new phone or new car every 2 years. Tesla, between the car they looked at from 6 months ago to now, drastic changes. So the cost structure went so the cost structure dropped by like 30%. Their margins go way up. That's why I knew there'd be profitability for Tesla last quarter, and it'll be the same thing, even way bigger the next quarter. People don't get this continuous improvement that basically no other electronic company does. And this is what this guy Monroe was talking about. And you can watch the last video he has, and he's actually out of Auburn Hills, Michigan. It's unbelievable. They took the car apart down to the screws, every little instance. He goes, he's never seen a company, and he takes apart every kind of device you could ever imagine, do what they've done. A year and a half ago, he was very bearish on Tesla.
And genius. I mean, and Jason, you've been right about this. We got to give you some props. You've been right about this the whole time. Just at a certain point in time, it's like, okay, it's worth 10 times, or right now it's worth over 10 times as much as Chrysler. Maybe Chrysler's worthless. Maybe it's just going to be just Tesla. But at a certain time, at a certain price, do you not ever consider valuation? Do you not? That's a good question. Let's just take it to, do you consider valuation when you're doing your long-term investing? I'm just curious, obviously you do a lot of analysis, and the story is all that matters in the short term. Valuation, throw it out the window. It doesn't even matter in the short term. And the short term might be years, but 10 years from now, you've got a story. You've done some homework on this. You believe in it. Is it I'm just trying to figure out because I look at it at 150 billion, I think a lot of the stuff you just talked about, I feel like is priced into it. So I said, it's worth 10 times as much as Chrysler. So that's,
So I have a simple, easy answer.
Yeah.
I bought Tesla at $38.10. It was at it was in the low billions. I forgot what it was.
Yeah, for sure.
My valuation prediction for Tesla was my goal of 50 billion is what I thought it would get to. Okay, 50,
yep.
50.
It's so 3 times that.
It's not 3 times that. And so then I had to go back to the drawing board and say, what changed? Did anything change? It's been 7 years. I was thinking the automotive companies would start to compete, but they haven't, and they're actually even gotten worse. And I look at the numbers and I do the math on the number of cars sold in Asia here, and I didn't expect them to expand that fast to China. Do I look at valuation? 100% I look at valuation. That's where I try to look at my downside scenario. So I think you guys know I sold some of my, maybe you don't, but I did sell some of my Tesla position at 780, 81 a few weeks ago. So I think I sold 20% of it. I'm hoping that it goes back down to 600 so I can buy more. But you're right on that stuff. I do, but I also I don't know if we've had her on, but Kathy from ARK Investment, her valuation is 5,000 a share. That's her bullish case, and she has increased it. And I looked at her models. I'm like, okay, my models are off. So I do look at valuation. I think Tesla, for where it's at now, definitely has a premium valuation on it.
So 5,000 a share, it's $1 trillion company. She's basically saying Tesla, most valuable company in the world.
Yes, not most valuable, because I think Microsoft is
they're right around there, 1.1 trillion, right up there with the leaders, like top 5 valuation in the world.
Don't do the fake news thing, Dennis. That was fake news. You just
well, no. How many $1 trillion companies, Spencer? No, Amazon, Microsoft, Apple.
At the White House, when they ask questions, they ask them in the negative versus just asking the facts. So then you would say, Tesla will be one of the top 5 most valuable companies. And yes, that's what she's saying, but it's not the most valuable, it's just, that's just the way I'm just saying it will be one of the most valuable companies.
Wait,
yes, she thinks that. And,
Jason, I'm sorry, finish that thought. I didn't mean to interrupt you.
Well, there's a couple things I just have to announce too. Can we switch off Tesla first?
Yeah, go for it.
Oh my God! Do you guys hear that printing thing? The kids printing their homework. I apologize. Literally,
we heard one from
Hewlett Packard.
We heard
Hewlett Packard buy the dip.
That's the stock of the day in Xerox.
Xerox, XRX.
I unplugged the printer. All right, now so Dennis and I.
My kid's gonna be coming yelling at you in a minute. Where's my homework, Dad?
But we're live on this thing. We got to get into stuff. We're late. It's 8:54. There's a lot of stuff. Okay, I got to do this. Dennis, I think we basically agree on the Tesla thing. It is a hefty valuation. Do I think it has a lot of room to grow? Yes, but they got to execute perfectly. And it can't just be a car company. It has to be an electric company that serves a lot of different purposes. But I'm just saying, it doesn't have to go start selling widgets or that's all I'm saying.
You think some of those business models are already started up there that, to get to enough 4 or 5 different revenue streams could take you there.
Yep, exactly.
Okay.
So
you're talking me back into it.
Riley, you can come say hi. Come say hi So I gotta announce one thing. Riley, come on the camera for 1 second.
Jason, stop blowing your kids.
Yes. Okay. But all right, guys, very excited. At 9 o'clock today, head over to BenzingaBootcamp.com. Benzinga Bootcamp. Check out the lineup. Register to get access to over 8 hours of live streamed educational content today. Registration is only $97, and you get lifetime access to the masterclass video set. Yes, I am reading this, guys. A handful of expert trading guides and a wealth of knowledge you can't get anywhere else. We're kicking off with a live trade session at 9:10 a.m. So hurry over to BenzingaBootcamp.com.
You should mention who will be there. Some familiar names for people who listen to our show. Nick Shaheen will be there, Anne-Marie Band, Jeremy Newsom. So if you're listening to the show, those names ring a bell. They'll be there.
I tried to make it a hyperlink in the room, but it didn't work. But so it's pretty awesome. There's actually 18,000 people signed up for it. But I mean, there's gonna be it's crazy. There is a private session where it's what's it called? There's a hedge fund manager, Shaheen, Chris Camillo, and that's a 3-hour private session that you get to interact and talk about it. It's all day today. It's the Benzinga boot camp. Luke Jacoby, Neil Hamilton, and the events team have been working their butt off on it. So benzingabootcamp.com. Now let's go to a few quick stocks. You guys were talking about some of the gaming plays, glue and stuff. What do you think about Zynga? Any opinion on Zynga? ZNGA?
Love it. I think it's okay. I've been a fan of Zynga for a long time. I actually had it for a long time. I've sold it. I wish I wouldn't have sold it because it started to break out. Michael Pachter was on our show. He liked it as well. I mean, again, gaming is just not going away. And, you know, even if we get out of this lockdown, I think just the fact that more people were trying out games during the last couple of months is going to help these companies going forward. So I love all the gaming stocks.
Okay. And I bought Zynga when Michael Pachter was on the pre-market prep show. And I've made 22% on it since that time. I think that was the data. It's 18% around there.
Yeah.
He's so bullish on it. I am a little surprised, Dennis. I actually thought Zynga would be like at $12 by now. I sold some of my Zynga because I was like getting impatient. So I sold 50% of it. I just think people are playing games on their phones and all that stuff all the time. I'm like shocked it's not like at 12 to, you know, whatever. You know what I mean?
I like the games.
Go ahead.
Yeah.
What are you
I love the online. Glue Mobile and Zynga. I like them both.
Yeah, Michael Pachter is coming on the show on Monday. Just a quick heads up on that. He'll be our
Michael
guest.
Pachter turns bearish on Zynga and Glue Mobile, me and Jason are selling.
Yes.
A lot of pressure.
Joel, I'll be listening to pre-market prep on Monday for sure to hear what he has to say. So a couple quick things. We're going to get to Express Spa and a couple other picks really quickly. Just have to do two more quick things. Monday, I heard you guys talk about Canopy Growth. We just got Canopy Growth to commit to coming on our event Monday.
Really?
So yes, they just committed last night or like at 3:00. I know the timing's interesting, but they are coming on Monday. We have an all-day bzcannabis.com. Basically, all the public companies in the cannabis space, which I know, like Dennis, you said the right stuff on it lately that it's been rising. But you just never know. You never know in this space who are going to be the winners, who are going to be the losers. I mean, I'm the dunce who sold Amazon at $10 a share in 2003. I also sold On Sale and a bunch of others that are all bankrupt. Those ones, so was right on those ones. Just it's sometimes hard to pick the one. So if Jeff Bezos, in my opinion, was available in a private webinar that I could have heard him speak and heard his vision for the future, that's what we have. We have on Monday BZ Cannabis, and we have basically the CEOs of every public company. It's an all-day event. You can pop in, pop out. You can actually talk to them directly, and they're all going to be there. We do this event, Dennis and Joel, you guys know, and Spencer. We do this event in like Chicago usually on June 1st, and it's about 800 people. We limited it at that, and it's just people get access to these public companies. This year we're doing it online because COVID. It creates an opportunity for listeners of pre-market prep to pop in and see opportunities before they become big. Like, don't miss out on that. I guess it's just something that we're gonna, that if you, it's not expensive. And there's ways to just view it for free, I think too. So, or maybe they sold out of that, but bzcannabis.com. All right, now I'm done with those things. I'm done promoting Express Spa. What did I do on that? I sold now, and this maybe was Joel's advice or Dennis's advice, but I think it was Dennis's. I sold 30% of the position. I wanted to get my cost out of it and a little profit. So now, as they
house
say,
is money.
What'd you say?
Playing with the house money.
Yes, that's what it was. And so now we're playing with the house's money. Now the two scenarios on that. By the way, I should read you some of the LinkedIn message I got from someone saying that like it's so crazy. So I got such crazy messages on this one, and I know when they're so
Ignore them.
No, I think it's good. I think he had the good.
I think they were good crazy.
I think he's talking good crazy.
It was both, right?
Yes, it's both. Most.
Well, bring in the love and ignore the hate.
That's what I was going to say.
That's how I do it.
Yeah, most was good. Most was good crazy, but this guy named John Balboni.
He gives the name too.
I don't know if I'd mess with him. I don't know if I'd mess with him.
You know who that is?
Sounds tough.
Oh, he does. Come on, dude. You're not fooling anyone. You know why, which is no doubt why you bought the day before the PR came out. You knew this was going to happen. Stop the charade. Integrity matters, Jason. You have any kind of thing? And I wrote, wow, do you think I'd be dumb enough to publicly comment if I had inside info? This is a first. Thanks. I guess if that's not true, then you just think I'm that good. If someone's accusing me of having inside, it's like you guys see my big muscles, right? My big muscles. If someone starts accusing me of taking steroids, that's a compliment, you know? Obviously, I don't have any muscles, guys. I'm weaker than Dennis, Joel, and Spencer by far. I was going to say combined, but that don't make any sense. So I don't know what I was saying there. But anyway, someone accuses me inside trading. That's like the biggest compliment you could possibly get, I would have to say, because I had no insider stuff. And you guys know that because you were there real time with me. Anyway, So that's what I'm doing on that. I also bought, it's been on about 5 weeks I've been on. I told you guys I was buying community banks pretty heavily, which I did because of the PPP loans, COLB, and a few others. Those are rocketing. And those are all like up 5 to 10%. I think it's just carried up with the financials. Another pick that I bought, and I don't know if we talked about it on the Friday show, I bought GAN pretty heavily. One of my bigger buys, and I gave it to Scott. I don't know if you guys saw the video that Scott made, one of our users in the chat room. I gave it to him on Tuesday. GAN is the back end to a lot of the sports betting stuff. So everyone's buying DraftKings. GAN does a lot of the sports betting stuff on the back end for these other applications. So there's a lot of people that are using, a lot of casino and other companies, as they get into sports betting, are going to be using GAN software. It recently went public.
Yeah, that's perfect timing for that stock. I wrote that up yesterday. You mentioned it, and not many IPOs out there. People love IPOs, and you get an IPO with DraftKings, which is just starting to take off. People are like, "Oh, I missed DraftKings." Absolutely impeccable timing on that IPO, and it's performed very well. And the gaming and the IPO, the double whammy. That stock hit 20 yesterday, backed off, but if you take the look at the DraftKings chart, I mean, how do you sell this thing with the momentum that it has?
And Joel, this is my biggest buy I've ever made. I bought it at 1585 and 1590 or 1582. I sold a very small amount when it hit 1850 yesterday, but I'm keeping 85% of the position. I think it's one of these plays, just like, I don't know if you guys remember, but we talked about the outdoor plays like DOO, like DOOO or
POOO,
Polaris, and like the Ski-Doos. Remember that ATV stuff, guys?
Mm-hmm.
So those stocks are up like 20% since we brought up on the show a couple weeks ago. And the GAN to me is the same kind of play. So GAN is that kind of thing. Now, guys, I have no extra intelligence. This is all.
Wait, someone check I'm checking the PR feed right now.
Yeah, we're gonna look GAN. They got a press release that they're getting taken over by Microsoft.
So I don't know if it's moved, but GAN is something. And then I got to go to a Joel favorite stock in 1 second because it has been moving, and I'm going to do more research on it. And this is one of Joel's favorite stocks. But before we get to one of Joel's favorite stocks, and it's one I own too as well. And I know, guys, the Benzinga Bootcamp starts in 10 minutes.
5 minutes, yeah.
Okay. 5 minutes, benzingabootcamp.com. Luke will kill me if I don't say it. Another stock that I have been playing, and I'm sorry my energy isn't there. Okay, yeah, here we go. This one I'm down on. So let's just call spade a spade. I bought it. It's down 4% since I bought it. Oh, whoa. Wait, is it up today? I bought Callaway Golf. Eli. E-L-Y. I bought it pretty nicely. My logic, again, is my Mastercraft play, the outdoor play of the day. E-L-Y. It makes golf clubs. Okay? You guys heard of it? Well,
yeah,
I
we know Eli. Yeah.
I thought you said Elon.
I call it Eli. Callaway Golf.
Yep, I know. So I played golf for the first time last week in like a year and a half. I was ready to go buy some clubs. So my logic is people are playing a lot of golf. I think this is such a no-brainer buy. I don't know what else to do. And so as of yesterday, I was down 4.93%, but I guess I'm seeing a pre-market gain of 8% today.
No, it's just on odd. That was just one tick. 100 shares. Sorry to disappoint you, but it was just an odd 100 shares trade off exchange 1650. It's 1520 to 1575. So it's looking like it could open up 20 cents, but not up.
All right, yeah. So I'm down, Eli. But let's look at that 1524 today. Let's look at where it's at next week. All right, that's what I'll say. I'm staying in GAN. Peloton, I'm still in. The other I know people like the stock symbol. So a travel play that I bought was Saber Holdings, SAVR. So I like buying the Dennis, just like Benzinga is like the back end to a lot of platforms. I like buying the back ends. I mean, front ends are cool. Like Amazon, I guess, does both because they do shipping. But I like the back ends. Saber Holdings, if travel comes back at all, it's SABR is a symbol. It powers like orbits and all those things. It was at 550 recently. It got crushed during this collapse. I've been buying SABR as a travel comeback play. So that is if you do the GARP thing. If we go GARP, I kind of agree with you saying GARP's more of a growth reasonable prices long term. It kind of makes more sense. That's a GARP play for me, Saber Holdings. It's not a trade for me right now. If it goes to 10, I will definitely sell like 20% of the position, but I want to hold it because I think it can get back to 15.
All right, that's 3 names. That's Eli, that's GAN, and that's Saber. So we'll see.
GAN looks like it could get hot. That's one that could get hot. If it can take out yesterday's high, would be important though. $20 is just always a critical
nothing
number for all
after
these
that.
newer companies.
Yeah, I'm staying in GAN, and like there's nothing, and what do you guys think about this stock? I don't know nothing about it, but I got a bunch of messages after the Express Spot call last week, Spencer, and the stock is, LTRPA. This guy who's a big pre-market. By the way, guys, pre-market prep, Dennis, Joel, Spencer, just freaking awesome. I mean, the loyal community guys here, like they love you, we love you. What Scott did with this highlight video he made was amazing.
That was great.
Fantastic.
That was fantastic.
Fantastic. And there's so many more of that. Shoot it. What's the email address for pre-market prep?
PreMarket@benzinga.com.
Yeah, premarket@benzinga.com. And my email is jason@benzinga.com. If you have an idea how you think you can help us grow or get the word out, like the YouTube thing, share it. We want to get 100,000 listeners. I know we can. So just feel free to reach out to us. Jason@benzinga, pre-market prep, premarket@benzinga. We're here, and there's another guy, Mitch Hotch, who's helping us now on some stuff. So we want people to make money, and you guys have, between Dennis and Joel, I mean, so many years of trading. They're not like, they're laughing a little bit when I make a call on like Express Spot and I see the thing, but they know that this stuff can turn the other way too. Remember, the market, when it seems so easy, there's something wrong a little bit. So you got to be careful. And it's so easy to say, I should have had this many more shares, but these things can turn. They can turn. And so I don't just go buy foolishly. I lower my risk level a lot, and I get mad because I'm like, we should have had more patience. I did that with my Twilio position. I sold 30% of it, and I was like thinking I was really smart. And then like 3 days later, it went from like 160 to 200. I'm like, why did I do that? And then I bought it back. But anyway, it's one of those things, like these guys, the show has so much experience. Listen to it, because it's like one of those things, like, history tends to repeat itself. Dennis and Joel have seen a lot of markets.
All right, I want to wrap before the options boot camp starts. So, Jason, thanks so much for the time. Remember, BenzingaBootcamp.com is the URL to join the boot camp today, and then the Benzinga Cannabis Capital Conference is
Give
Monday.
that URL again, because I just went there. It's Benzinga.
BenzingaBootcamp.
BenzingaBootcamp.com.
Oh yeah, got it.
I never got color on LTRPA, but it's okay. Someone emailed and asked me about it. You guys have color on it. I know we'll talk about it. We can talk about it next week. But I'm still long DOO, and I'm long Carnival Cruise Line. But I gave you the 3 stocks. That's it. I'm sorry, there's no Express Spot 100% pop.
So disappointing today, Jason. All right,
I'll make up for next week. Thanks for having me on, guys. Love you guys. Keep the energy. Have a great holiday weekend. Dennis, Joel, Spencer, you're my heroes. Peace.
Thanks.
All right, I'm going to wrap it up here. Thanks to everyone who joined us. Thanks to our guest, Jason Raznick. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Joel and I will be back at 3:40 p.m. Eastern Time to close the week up. In the meantime, everyone have a great rest of your Friday, and be safe, and good luck out there.